brokerage ethics. And I guess Little Red Riding Hood and the bad wolf defrauded the grandmother of her property. He didn't eat the grandmother, he defrauded her. And then we had that midterm test question where we talked about the Business Brokers Act of Ontario has made a vision of business ethics relating to real estate enforcement law. One of those questions we handed out this evening involves some people defrauding an elderly woman of her property. And it does refer to the fact that a complaint has gone to the Ontario Real Estate Association as to the behavior of the broker in this regard.
So could the class take this as a hint that there is going to be a question on ethics in the panel?
And if maybe that article will cover that? I only have to read those various ethics questions, the Posner article and that blue book, which they've probably not cracked recently. Walter Posner's article, Bassford's article, etc. We talked about real estate management and what were the different functions of real estate managers. We talked about real estate fraud at some length. And we had discussions within the class on how they would prevent such a thing. Some of them included taking eye scans, fingerprints, branding people. There were many brilliant ideas, right? Oh, and how they're going to take pictures of everybody, but of course no one ever ages in their world. So that a person that's owned a property for 60 years, 50 years, will still look the same as they did when they were 25. Could you take as a hint that maybe fraud and business ethics might be on the file? We all know about appraisal because you had a lot on it. You better know what an appraisal is. Why do you get one? I just have to flash all these. Always. What is market value? And why the emphasis on prudently, knowledgeably, not affected by undue stimulus? And those important assumptions. The buyers and sellers are motivated by self-interest. They're informed and acting prudently. The property is exposed in reasonable time in the open market. And the payments should be in normal residential terms. We wanted you to understand the difference between value, price, and cost. What was value? What's price? What's cost? We wanted you to review those appraisal principles and understand them. And that towards that end, we had a chart as to the process and the three methods of value. Famous equals I over R formula. In finance, we wanted you to understand the financing cycle. Why do we have different financing for land development, construction, land acquisition, and so on? We wanted you to understand the alternative forms of mortgages. A popular question is to ask you what's to differentiate between different types of mortgages. That wonderful blue book again. Package mortgages, vendor take-back, participation mortgages, wraparound, variable interest rate. The list is endless, and the reverse here. We wanted you to understand the important differences between residential and income properties in terms of lending. That for an income property, it's the property that produces the income, whereas for residential property, it's the individual that produces the income. So that you should understand the affordability ratio for residential, which is based on debt service divided by personal gross income. The debt coverage ratio, which in income properties is the relationship between the net income and the debt service. Different concept. We certainly want you to understand the time value of money, why it's important. Default. We want you to be able to make the distinction between the legal and non-legal remedies in the event of default on a mortgage. There's 5 legal, non-legal steps, and I believe 6 legal steps. We wanted to understand affordability, and we recommend this article by Bartel, my longtime boss. He's the editor of that blue book. But you should understand how affordability is affected by the amount of the down payment, how if you can vary the amortization period, the interest rate, payment frequency, and so on. In investment, we wanted you to understand the real estate investment process. That was a 5-step process. Identifying the goals of the investor, looking at the investment market climate, developing a meaningful analysis, making some decisions based on rules of thumb, discounted cash flow, and traditional types of techniques. And who are the participants? The government, the tenants, the investor, and the lenders. We wanted you to understand the different risks associated with different types of properties, multifamily, office, warehouses, hotels, and shopping centers, and this is raw land. To also understand the roles of the different players, the insurance companies, pension funds, syndication, and to understand the discounted cash flow model, present value, and to understand sensitivity analysis, which we went through this evening already. In taxation, we wanted you to understand the key tax principles, emphasizing the first 3, all those different types of taxes, and be prepared to understand some of the key policy options that have been used in Ontario: capping, the capping option to limit increases, the clawback option, how different classes have been created to try to move reassessment along, and other things such as graduated tax rates, phase-ins, various tax ratios. In development, we gave you a model of how development works, conception of the idea, refining it, doing a feasibility study, negotiating contracts, committing, doing the construction itself, and initiating operations. And we introduced the development or subdivision approach with those 5 steps to the deciding feasibility. And we took you through that development model, the costs, and the returns with your case study and that sensitivity analysis. In last week's lecture, we introduced the role of government in real estate, the role of the federal government in banking, insurance regulation, trade, environmental protection, urban renewal, airline and railway regulation, and so on. The role of the provincial government, local government, court and administrative bodies, all those administrative tribunals, both local and provincial. We took you through the generic decision-making process, introduced you to the developer citizen, the municipal bureaucracy, the role of public input, the role of the politicians, and of course the role of the Ontario Municipal Board. Then we took you through zoning, official plan, subdivision, land severance, and building permit, and going backwards quickly, how in the official plan amendment, you have two bureaucracies, the municipal one and potentially either the regional bureaucracy or the provincial bureaucracy to amend the official plan. And in the case of building permit, we pointed out that there is an appeal process, but that it's to the Building Code Commission, not the Ontario Municipal Court. Other than that, all the other processes were identical. We introduced you briefly to the rent control legislation, how it was amended as a result of the review done in 2004, what the points of that amendment were, what issues were examined, and how the Residential Tenancies Act in 2006 changed the rent control legislation to be what we have today. So, that was a very fast and furious review of key concepts. You might take as a hint that we wouldn't have reviewed them if we didn't think they were important. Any questions?